I'm honored to be doing this again with SA, and also very grateful to all of you, our brokers, and I know even some of our competitors have tuned in for the day, so welcome to you as well. I believe there's about 700 people watching right now, and no pressure on our panel. It falls on me, of course, to talk you through the various findings that come out of the survey. If we can just move on to the next, please. This year, we went a little bigger than we normally do. We spoke to almost 1,000 business owners, executives, and managers. And what we try and do with the survey is, in conjunction with the claims statistics that Gareth just mentioned in his presentation, we ask business owners and brokers in a variety of different industries what their thoughts are on issues that could give a rise to claims. We spent a lot of time talking about COVID and what the impact was on their operations and whether that actually changes their risk profile. So that really is where we're coming from. We believe that it gives us a solid base. It gives us a lot of information to talk about. At the end of the presentation, at the end of the segments today, which will be at around 1 o'clock, you'll be presented with a QR code where you can download the full report, which runs some 40 odd pages. So obviously we can't cover everything that's in the docs in the session today. We have relative segments. So yeah, if you've got questions, please don't hesitate to post them on the chat. We'll probably have to answer them offline a little bit later due to time constraints. With that, I'm joined at the moment by Manisha Chiman, who heads up our liability area. Welcome, Manisha.
Thanks, Simon, and thank you so much.
Pleasure. And I'm also joined by Anton Meyer, who heads up claims at SHA for his inputs. Welcome, Anton.
Thank you, Simon.
Okay, the next slide, please. All right, so off the back of the information that was given to us by Gareth, I thought it would be a good idea just to sort of break these down a little bit further by business unit. So what we're looking at here, when you look at this graph initially, it looks like we've had a significant dip from 2018 going into 2019, 37 odd %. And I see brokers out there going, well, why are we increasing our premiums? Would you like to just give us a little bit of insight into that, Manisha?
Sure, Simon. So I think, while the incurred claims have decreased, we are seeing a volume increase in claims. The reality is people are becoming still more aware of their rights. And so they are still instituting claims. In addition, the claims cost, or the average claims cost, has gone up. And Anton's going to unpack, I think, Anton, you can jump in here for me, but the average claim cost has gone up significantly. And so when you start looking at pricing and the average claims cost, you actually start seeing you have a disparity. The premiums that were charged in our soft market really doesn't meet the obligations of the claims. And that is where we are trying to get the premiums to move upwards, to try and have a sustainable pool of premium to meet claims.
Would you, sorry, Anton, maybe this is a question for you. Would you expect that 2019 year to for the losses to develop further, so that we, one of those slides Gareth showed a loss ratio in 2008 going from 10% until it matured eventually at about 120%. Is that something we would expect from 2017, 2018, 2019?
Simon, yes. Look, as Garrett mentioned earlier, this is a long-tail business, and I think what we do need to understand is that as investigations continue, we do realize that we can't reserve up front. So what we do is once we have the information in, that's putting the reserves in, and we start taking the claims as soon as they mature into the position where we can settle them. So I firmly believe that we will find that the 2019 year will further deteriorate over the next couple of years. And it's just, it's the very nature of the business we do. could have a claim that looks absolutely defendable, and we defend the matter for 2 or 3 or 4 years, and then way at the end, on the courts of the steps of the court, we realize that there's something that we weren't aware of all the way through, and then of course it gets settled. The other issue is, of course, we reserve for the end during the period as well. So as the matter develops, obviously we start reserving and paying for legal costs. So all of that will start growing over the next years, and will probably only mature, again, in terms of our statistical analysis, probably only in the next 6 or 7 or 8. Of course, there's always that one matter that'll continue for, maybe even 10, 12 years. So yes, I definitely think that it will evolve further.
Okay, thank you. Can we move on to the next slide, please, guys? Okay, this is where things get interesting. I think what you were talking about, Nisha. So we saw an increase in the average liability claims submitted between 2016 and 2019, and as what looks like an exponential increase in the average personal injury claim. Manisha, can you comment on this? What would be driving that?
I think, there's a multitude of factors. Okay, I think one is consumer awareness is at an all-time high. It's expedited through social media, so that already you've got that sort of volume-based audience, and that's really pushing and motivating for claims to actually come through. In addition, I think we're also seeing, increased medical costs, increased litigation costs that has an impact. And overall, people are no longer, just coming to our insurers and saying, I'm going to claim. They now have access to a multitude of, the legal fraternity. And so they come through the legal fraternity, and they've, really re-looked at how they frame their claims. And so general damages also has seen an increase in quantification when those summons or those letter of demands come through.
I think Anton, I read in your narrative that you submitted for the report, which our brokers will get later today. You made a comment that you felt with a lot of people, particularly the attorneys working from home, that a lot of claims that we're about to prescribe seem to have been picked up again and given new life. Can you just explain that?
Well, thanks, Simon. Yes. If one, obviously, working from home, lots of these, we saw them evolving all of a sudden, where, historically they would have prescribed or whatever. I think, once again, as Manisha, this is absolutely, there's a whole host of factors that play into it. And, on top of, the main issue, you can always look at the Consumer Protection Act. I think, the financial implications on third, we need to understand, and that also, I think, drives these claims. So I think at the end of the day, people now who were historically happy with getting a voucher or a free meal or whatever the case may be, now actually want proper damages paid. There are attorneys who also during this time didn't have a lot of work, who then revisited some of the clients and the claims and so forth. So yes, it is one of those things. But yeah, I mean, we can have a lead session of 4 hours just on this specific aspect.
Yeah. I thought this increase in personal injury claims, because I mean, percentage-wise, it's much greater than the average liability claim. I thought that was particularly interesting. But that little highlighted block on the graph on the right, that for me was an absolute shocker. We're obviously talking largely about the 2019 numbers here, but you mentioned that there's been a surge in slipper claims in 2020, and I found that surprising because I mean, for at least 3 months there was a hard lockdown, which meant people weren't moving around as much as they would normally. I mean, what can we expect to see happening in 2020? Is this gonna, I mean, is it just gonna explode, and why?
Sadly, yes, I do believe that it is going to explode. We are going to see quite a number of these summonses coming through and guys pushing it. As I mentioned earlier, the financial position of the individual third parties, is something that plays directly into explains for the surge in these things. Other aspect that sort of adds into the slip and trip claiming is people not having proper medical aids in place. We are seeing an increase in matters where following a slip and trip, people are suing for a knee replacement or elbow reconstructive surgery and all kinds like that. And of course, medical expenses are increasing every year. But when we investigate these matters, we realize that surgeries and procedures were in actual fact already on the cards before the person fell. So it's just guys taking that opportunity to make someone else pay for it because they might not have a proper medical aid in place, or they're just seeing it as an opportunity to make extra money on the side, if I can put it that way. But that's what we've experienced so far.
I think that's shocking, actually, because it also, I think for a lot of people, they wouldn't view that as fraud, even though it's actually what it is. It's like we were injured. It's just that while we're here, we're going to get something else done as well.
Correct. And of course, one of the main factors as well is, of course, with social media. So someone now getting injured and going to social saying, at this specific shop I slipped and this happened, and now the guys don't want to pay my surgery. That is taken as fact, on the social media platforms. Although if you drill down into the individual case, it's not necessarily true. But it is something that we deal with, and in order to protect our clients, we investigate these things properly, and we deal on its own merit. But yes, it's shocking, what we are seeing, especially, and we'll get into this at the next one for the 2020 year. But it's quite frightening what we have seen over the past year.
Yeah, thanks, Anton. Can we move on to the next slide, please, guys? Manisha, I think this one's for you. When we were chatting to business execs in our 34% of people said that they'd noticed a deterioration in the quality of products or workmanship by suppliers. And then related to that, it didn't appear that a significant portion of business owners were actually doing proper quality control audits on a regular basis. What do you make of this?
This is very interesting because this really ties into the underwriting process and sort of the questions that we're starting to ask. And so when you say to us, that you've seen this deterioration in the quality of workmanship from your suppliers, ultimately this is going to affect the business. So what we can see is a ripple effect, because if you are incorporating an inferior product that is not to your own quality standard into your product for end consumer consumption, effectively you're opening yourselves up to litigation in terms of product claims. And so that whole thing about quality audits comes back into play because it goes back to supply chain management. So the fact that people are recognizing that they've got these inferior products, and then furthermore, we're not doing the audit to check up on these products, it's just going to ripple. Our underwriting questions now that we're trying to cultivate is to actually understand the supply chain management and how often that the client actually goes and does a supplier audit, because the impact is either in products liability or products recall. And I think, Anton, if you don't mind jumping in here, I'm not mistaken, our claims experience is a reflection that usually we actually pick up inferior product incorporation or risk management at claim stage. Whether it's metal filings in chocolate bars or glass in sugar, that only comes up when you actually get the claim.
That's correct, Manisha. I think if I can expand on what you just said, I've experienced as you mentioned, metal shavings, grease, crystal, silicone, stuff like that, all kinds of contamination within product. And it's between the two main issues. One is the equipment being serviced in the normal way, but now because the people servicing the equipment is not fully staffed, they don't have the correct management measures in place like what they used to, or they're doing it quickly just to make some money, and move on to the next job. They don't make sure that the machines have adequately been checked after they've been repaired, and that then leaves the metal shade, all kinds of other stuff within the end product. Now, that's not directly linked to our insured. However, in terms of the Protection Act, they have to take the responsibility for it. We've seen drivers contaminating fuel and other chemicals and stuff like that because, instead of having two people in a truck, there's not only one person because they're trying to cut costs. So it really, from a risk management perspective, this is something that's quite material and that we already see, claims coming from.
But I think, Anthony, it also ties back
guys.
to, sorry, Simon, if you don't mind, just kind of a quick one. It ties back to the economic environment that we're working in, because people are impacted economically. And so there is sort of a cutting of risk management because everyone's watching the expenses. But the fact is, the more we sort of cut our expenses at critical areas, there is long-lasting effects for the future. Thanks, Simon.
Absolutely.
Correct.
Thanks, guys. And next slide, please. Oh, sorry, Anton. I think what you were just about to talk to is on this next slide. We asked business owners about sharing more information with us, and interestingly, 31% of business owners said that or 31% of companies that keep some kind of risk register, that they don't actually share those with their insurers or their brokers. 19% of the respondents we spoke to said they don't use contracts. This comment in particular was quite strong from the SME sector, but I think with both of these together, I mean, you've kind of melting pot where you can have a serious spike in claims activity. Any comments?
Simon, yes. We last year, we've seen a couple of material claims being settled simply because our insured did not apply their minds when they entered into certain contracts. In certain instances, there were no contracts whatsoever. And in certain other respects, there were amendments, services required, which was never put in as an annexure and a formal change to the wording. And the problem is when there is a claim, you go back to the contract. And material risk that we run within the liability across the business. If we are left with defending a claim where there's no contract in place to detail what is required, it is very, very difficult to defend that, firstly. And secondly, it can then lead to the ultimate, sort of us having to pay the damages for that. And of course, instances and recall, the actual damages at the end of the day exceeded the limit of indemnity, which then, of course, directly into the financial position of our insured, not just his excess. So it is of paramount importance that the guys actually, the service they provide and whatever they do is codified correctly.
Thank you. Manisha, what do you do with these risk registers if you get them?
For us, it's really important on the risk register, and I know a lot of insurers are not comfortable giving them. So it's really confidential information that we ourselves hold confidentiality. But the reason we're asking for it is that we want to have a better understanding on what risks you see your business experiencing and at what level you're having these conversations. We want insights into how you're running your business. So if you have operational maintenance as one of those key points right on top, that gives us a concept or an idea that you are actually proactively talking about that at a board level, that there is constant monitoring of that particular risk item. So those risk registers gives us real insight into the business. It also talks about the operational side of it, because a risk register is not only there to make things, well, we've identified 5 risks. They also talk about the operational. How are you putting those risk items or dealing with those risk items? A keen observation from our side in recent months has been that despite having fantastic operational manuals or, procedures on a very, very senior level, what happens is it doesn't filter down to the rest of the team. And so that's where you start opening yourselves up to legal liability, is because we don't see practice of those operational procedures.
Sure, thank you. Guys, can we move on to the next slide, please? I'm not going to ask you to comment on this, Manisha and Anton. Just safe to say to the audience that it's worth looking at this when you take a look at the report. And we've seen a dramatic increase in labor disputes, CCMA and labor court activity in particular over the last 12 months. A lot of that is obviously going to be exacerbated by COVID, which means there's a knock-on effect to things like practices. Can we move on to the next slide, please? Just in closing, Manisha, from your perspective, things to watch out for in 2021?
I definitely think spread of fire explosion, very big trend in that space. I think a lot of people would have seen this morning, we've got a plant in Durban that is burning. It's a developing story. So I would expect that assets underwriters and liability underwriters will be probing questions, whether it's warehousing of chemicals or any sort of fire protection systems that you should see questions in that space. I don't anticipate that it should be as much more work for the liability market, because in the assets market, they're already asking these questions. From a pricing and deductible trend, we still do expect rate increases in terms of pricing, also a decrease in capacity. You can see the market moving more towards a co-insurance model because there's an increase in severity losses that are coming through and an increase in deductible structures. There really is a need for, the insured to take on a higher deductible. Now, this is motivated two ways. One is they want to see a reduction in their premium. Alternatively, they are seeing expenses, so they choose to take the lower premium. But that means that they need to implement proper risk management. Otherwise, they're not going to be able to meet their deductibles that they've elected. And that has, repercussions in terms of reputation or client relationship when it comes to the third party as well, from a longevity perspective. I think from a COVID knock-on effect, we're seeing diversification in the market in a whole new space. Guys that were doing clothes are now manufacturing sanitizers, etc. So it's so important from a client perspective. Those sort of things are discussed with the intermediaries and your insurers. It's a changing risk landscape. And the question is, are we accounting for it? And is the risk management and the operation of the business adapting to deal with this sort of needs analysis around the changing landscape?
Thanks, Manisha. And Anton, from you?
Simon, yes, I fully support what Manisha just said. Personally, I think we're going to see a continued increase trips, as we mentioned earlier, as a result of the other sub-products. In all claims, we can see an increase. But then also, I believe that we're going to see a spike in Epl claims given COVID. As lots of companies close down or rationalize their workforce, we'll see some activity in that space as well.
Thank you. Thanks, guys. Anton, I think you're staying with me for the next segment. Manisha, thank you so much for your contribution.
Thanks, Simon, and thanks, Anton.
Thanks, Manisha.